Hello everyone, this is Dave, aka DREBG, senior member over at informedtrades.com. If you haven't had a chance to visit Informed Trades, I welcome you to go over and poke around a little bit. Plenty of free stuff, lots of great traders, and you can even open up your own blog and share some of your own ideas. What we're going to be doing today is talking about my case for going long at 141 on the euro dollar. We've seen the euro go through a lot of changes in the last few weeks, and what I'm going to try and do is make my case for why I think there's still some bullish move left in this pair. A couple of quick things we can go over. The orange line in the middle is the 34 EMA, which is kind of an amalgamation of the 8, 20, and 50 EMAs that I like to use. It's nice to have a nice clean line that represents pretty much all of those, and of course the 200 EMA is the dotted line that you'll see at the bottom. As usual, no analysis is complete without doing some support and resistance area lines, getting an idea of having structure to price action, and you'll see that I've got those marked here. And if we bring it down to a 4-hour chart, we can get a little more detail. First thing we do is do a nice fib study of that drop from the 149.50 level back in May, and you'll see that we had price action bump almost right up to the 78.6 level where everyone on the planet thought it would get to before it fell off, but it never did get there. Instead, we had this nice head and shoulders formation, which I made a little bit of money off of, but frankly, I thought after this turn down, we'd have a turn back up and revisit that 786 level before anything else, but didn't pan out that way. So let's mark off that 786. We'll come back to it later and get rid of that fib study since that's the only level we're concerned with. And if we take it another level, we can fib study this drop here, see how we ran back to the 50, and now we've had this big, huge drop off in the last couple of days. Obviously, the big thing here is we're getting close to this 1618 extension, and that's right around that 141 support level that we identified earlier. So if we mark that 1618 level, that'll then allow us to take out that fib study, since again that's the level we're most concerned with. And we can then move on to maybe a fib expansion study to learn a little more about how this ABCD pattern may play out. You'll see that the 100% expansion of this ABCD pattern rests at right around here at 140.115. So if we mark that level, we can then take out that expansion, because again that's the most important level that we're talking about. And what you start to see is a level of confluence with a number of different levels of support. Let's take it another level. Let's add in some monthly and weekly support and resistance areas with the pivots. Here's the weekly and monthly pivot that happen to be right around the same area, around 144.50. A heavy level of supply, as you could see here. When price action hit it, we really bounced off hard. But again, weekly support too is resting right here. And if we look at this, and you take this entire area of all these levels of confluence, it creates this tiny rectangle that represents a level of demand where price action took off here back at the end of May. So this area really starts to become pretty hot and heavy in terms of a place where price action could actually end up turning around. Well, Dave, that's great. So you're long for 141, but when the heck is that going to happen? Well, by doing that ABCD pattern and taking the same angle as AB into CD, we see that takes us right into next week, sometime around July 2nd. Next week, week after. At any rate, that means perhaps we have this run up here before we have a run down to grab any demand that might be in this level where all these levels of confluence are. It really all boils down to this: a defined level of serious support that could really lead to a solid run up. By looking at the hourly chart, it gives you more detail of what I'm talking about. We're really looking at trying to get this price action to come back up to that 786 fib level we talked about before, and even beyond. Yes, I did say beyond. I'm a big fan of Sive Morton over at Forex Peace Army, and he kind of put this out on the table as kind of a neat idea of where price action may be going midterm. And he really kind of thinks that we have some bull market left that would lead us to this butterfly sell pattern up around the 150 level. Now this is 1,000 pips away, and it's kind of pie in the sky type of stuff, but wouldn't that be nice to see a 1,000 pip run up from here and then have a nice drop off down to the 135 level or this monthly S2. So that's kind of the analysis that we're running with right now. Obviously, we're most concerned with at the moment this hourly chart and bouncing off this level around this time frame. So I'm hoping that this has helped someone at least identify how it is that I go through an analysis of where things might be going. But more importantly, I'm hoping that it bounces off and people make some money. That's it, and I'll talk to you soon. Bye-bye.